Hey guys, this is Dinesh Logeswaran, Senior Executive Director with Experior Financial Group. And in this video, I'm going to show you exactly why Experior is growing so rapidly and why this company can be a fit for you. So I want to start with the mission statement. Every company out there has a mission statement and they stand for something strong. Experior Financial Group is about building financial foundations to empower families today so that they can leave a legacy for tomorrow. Amongst the thousands of IMOs that exist in the USA today, I can tell you proudly and confidently that Experior Financial Group is one of the fastest growing in terms of the number of agents we have in our sales force, also the number of families we're helping on a day-to-day basis, setting up for their financial futures. It's just been incredible. We actually started in Canada in 2014, and we're the first IMO to start in Canada to go into the USA. We're operational in all 50 states. We're also operational in all provinces in Canada, and we're just exploding. We're looking for great people, and I hope in this presentation, you're gonna see that vision. One thing when you're looking at an IMO, you need to know who the CEOs and founders are. And I'm proud to say that Jamie Prickett and Leanne Prickett have been so instrumental with their vision of taking this company global. They're young, vibrant, engaged, and in growth mode. They want to do big things and they want to create a lot of leaders in this company. And that's what I see in them, and I admire that about them. They've also launched this great book called You Can't Fall Off the Floor. It's a story of rags to riches. There's over 20 executive directors that have been featured in this book. I was fortunate enough to be one of them. You get to really hear from people's backgrounds, the diversity, the struggles they went through, no matter what background they were from, whether you're an accountant, an engineer, a warehouse worker, you are able to build something great here at Experior Financial Group. Part of the reason why Experior is growing so rapidly is because we have power of choice. Having all these insurance companies to our disposal means that we can do the right thing for our clients 100% of the time. Whether you're trying to do term insurance, mortgage protection, permanent insurance, IULs, annuities, you have it all here. And you get equipped with the knowledge and skills so that you can do the best job for your clients. We also have the award-winning platform, GVX, Global View Capital Management. If you're in the space of helping high net worth individuals, where you have people that bring in assets of $500,000 or more, I can tell you that we have the incredible discretionary management with funds that have incredible track records. This is something you want to really learn, at least investigate. And if you're in that space, I would tell you this is something you don't want to miss out. I did mention that we are a Canadian-born IMO. And one thing we had to make sure that we got really good at is satisfying the regulators, making sure that compliance was on point. And this is why we've adopted the financial needs analysis tool in our back office. This is mandatory in Canada, and we're bringing it to the USA, and we're making sure that every client deserves the fair shot of doing what's right for their financial situation. So by doing a financial needs analysis, you really get to dissect their financial report card, where they are at when it comes to assets, when it comes to savings, liabilities, their mortgage debt, when it comes to the insurance need, when it comes to the education savings fund, what they're set up for retirement. All of that can be analyzed by this great tool, and it's embedded in our back office, one of the most valuable technologies we have today, so that you can do the right thing for your client 100% of the time. Experior is really shaking up the world right now, and I can tell you, we are a very unique model, and let's talk about that. See, Experior's model, the infrastructure, is a unique tribrid model. And you're probably like, what is a tribrid model? Well, our CEO and founders, when they did the investigation in the industry, they looked at the 3 different ways you can probably become a life and health insurance agent. They looked at the captive models, they looked at the IMO models, and they looked at the networking builder models. So let's talk about all 3. Let's see the pros and cons. See, the captive models, they got strong training, a lot of support programs in place, and the brand is recognized, of course. But I can also say there's some drawbacks. You got limited product offering, possibly limited expansion possibilities, and also limited exit strategy. If you ever leave a captive model, how many of them actually allow you to move your book of business with you, or you own your clients? So those can be something to think about. At the IMO brokerage level, you got access to many products, you own your clients from day one, and you're probably gonna make a good compensation rate when you're servicing clients, which is incredible. But what about if you wanna build an agency? Some of the drawbacks can be that if you do build an agency under your IMO, you actually have ownership rights. Meaning, is there a buyout program on the overrides or the income that you would make off the team that you built, the time and hours that you put in? That's something to think about. What about training? Can that be a hit or miss depending on the type of group you're part of, the branch you're part of, the environment, the culture, the energy, right? What about the brand? right? Is there an actual brand with the IMO you're part of? Is it growing? Is it vibrant? So those are some of the things to always think about. Then you got the networking and builder models. It's becoming a great trend out there. Why? Because you have the ability to build your own agency. You have an override structure. You can grow nationally. You can help others win, and in return, it will help you win. But some of the concerns is also the brand and image issue. Depending on the IMO you're part of, there is high turnover, and because of that, the buzz in the market can be that, hey, it's not working out well for them. Some IMOs also, a lot of the compensation goes to the top people that actually elevate to the top. And the people at the entry level don't really get to make much compensation, which also provides a big hurdle, because if you don't make good money at the early stages, can you really stick it out to see the vision to stay longer? That's another concern. Training can be also a hit or miss depending on the group and the culture, the branch you're part of. So now do you get why we're the tribrid model? Well, this is why, because we took the best and we left the rest. See, with Experior Financial Group, we got the strong training. We got the support programs in place. We have a brand. Experior Financial Group's brand is growing day by day. We have access to tons of different carriers, over 50 carriers. We own our clients from day one. It's in our contract. And if you're a producer looking at this and you're like, hey, do I get fair compensation? Absolutely. I'll talk about our compensation rate. Can we grow an agency here? You can do that too. We got an override structure, and we want to make sure that we can grow nationally and eventually internationally, which is huge. Experior's industry-leading compensation model for builders and producers. Now, why do I say that? Is because when you're joining a company today that allows you to build a team, you want to make sure that your entry-level agents can make fair compensation. And that's what Experior adopted. See, our entry-level agents called a financial associate starts at a 70% contract level. As soon as they get licensed, they're up and running, they're ready to go, they get fair compensation. To move up from financial associate to senior financial associate, now you would have to submit $10,000 of target premium in a 90-day rolling period. And once you do that, you get to an 85% contract level, which is very fair. And then from there, if you want to move up to senior manager, you would have to make $30,000 in commissions in a 180-day rolling period. And from there, you can move up to senior manager 2, which is 107.5% compensation rate. And that's a $50,000 commissions earned in a rolling 6-month period. And finally, if you want to get to senior manager 3, that would be 115% compensation rate. And that's $75,000 earned in a rolling 6-month period. Now, the reason I state all these levels is because as a producer, you don't have to recruit a single person in our model to move up those contract levels, which is amazing, because someone that's joining our model today might not have the mindset to go out there and recruit and build a team, but they're ready to go help families and serve them and build their financial plans. So why do we want to avoid them or stop them from doing that, right? Which is huge. So in our model, you can come in here, you can start doing that from day one, get to those levels, start building yourself a little success story so that eventually when you are looking to build that team, you can go share your track record, which is huge. And that's part of the reason I find our company's been growing a lot of retention, is because a lot of people that came here at the beginning who were kind of reluctant to building a team, they decided to start helping families. And because they were able to help families and make some income, they were able to also bring on people later by inspiring them to do the same. And what if you're a builder right off the gates? Hey, as I said, we can do both. We can be a producer, as I mentioned earlier, and a builder. Starting as a builder here at the entry level, you still start off at a 70% contract rate at the financial associate level, as soon as you're licensed. To move up from financial associate to the senior financial associate is you have to submit $10,000 of target premium in a rolling 90-day period, similar to the producer's model. But if you want to now move to the senior manager level in the builder model, now is where you got to start building a team. And because you already have the motivation to do so, that would require you to have 4 active licensed agents, and collectively, you and the 4 active licensed agents would have to submit $30,000 of target premium in a rolling 60 days. There is also a cash flow requirement of $10,000, which you would have to have earned. You'd still have to have a little bit of a track record. So that's part of the promotional requirements. To move from there to an executive director level, that's 115% contract level. You would need to have 7 active licensed agents. You'd have to submit $60,000 of target annual premium in a rolling 60-day period. And that would get you to the 115% contract level as an executive director. Now, what's the difference between an executive director and a senior manager 3 level, as you noticed earlier? A senior manager 3 level has the 115% contract level. So does the executive director. But the difference is because you are a producer as a senior manager 3, your override will always be as a senior manager in the builder's model. So you'll be a senior manager at 100% in the builder's model, and you can override anyone from the financial associate above to you as a senior manager. But you won't be able to override them as an executive director. So you would actually have to be an executive director in the builder's model to override them, okay? But it doesn't stop you from earning the commission rate at 115% as a senior manager. From executive director, you want to hit the top contract level in the builder's model. It's called the senior executive director. You would need to have 3 direct executive directors on your team that you've established, help others win and you win. Or you can have 3 ring earners. And ring earners in our company means that you made $100,000 minimum in a rolling 12 months. So either or, you can have 2 executive directors and 1 ring earner. All 3 of them can be ring earners in your team direct to you. Whichever comes first, you would be able to hit this. You would also need 80 licensed agents that are in your team. In your team, that means that you have your 3 direct executive directors or your ring earners who also have licenses under them. Collectively, you have 80 licensed agents, and that will put you now to the senior executive director level, which is incredible. So more details about this builder model, we can definitely talk in detail, but at least you have a picture out here that can show you some qualification guidelines. I would love to share more details, and I wanted to give you a quick briefing on this today so that at least you get the idea of the fair compensation in our business model. The philosophy is, hey, if I can get the entry-level agent paid well, would that allow my entry-level agent to stick it out longer so that they can actually go out there and build a team one day because they're in the environment already. They started to see all the builders build their team, so they eventually will transition to becoming a builder. And it's been working out great. Experior has been growing and exploding. So having fair compensation, guys, entry levels, super important in the field team. So let's talk about an example for compensation. See, if I take $1,200 in annual premium, and let's use a T20 as an example, we got different levels, as I mentioned. At the entry level, let's assume you had a 70% contract rate. You would take 70% multiplied by 1,200, and that would give you $840 in compensation at the entry level. Now, if you're at a senior financial associate level, that will be 85% multiplied by 1,200. That will give you $1,020. If you're a senior manager, that's 100% of a $1,200. That's going to be $1,200. If you're an executive director, that's 115% of $1,200, which is going to be $1,380. And if you're at 120%, which is a senior executive director, that'll be 120% times 1,200, which will be $1,440. Such fair compensation in the builder's model. All right, guys, let's use another example. Let's use IULs, Indexed Universal Lives, and we're going to use a $2,000 target premium. So one thing I am going to explain here is we call it a ratio or a factor. Now, for some of you who are watching this, you're like, hey, this is something new. I've never heard of this. So what did Experior Financial Group decide to do? We always wanted to make sure that we compensate the agents that are actually writing the business fairly. So instead of giving everyone a flat rate at a lower comp level, we decided, hey, let's give them the most amount of compensation for that exact product they're actually offering your client. So in this case, we're using an example of a 90% factor, and that's really the average factor that we would have with some of our carriers. There's even companies we pay the full 100%, some carriers that pay a little bit less, but Experior wanted to make sure that the agents are getting paid fairly. So in this example, if you take $2,000 and we use a 90% factor, that would give you $1,800, and then you would have to multiply the compensation rate. Now, what is the rationale behind this? Is because it's all about volume, right? If we're not sending enough volume to certain carriers, can they afford to pay us enough bonuses to the IMO so the IMO can distribute enough compensation? Now, can these factors just increase over time? Of course. As we send more volume to these carriers, our factors are going to go from 90 to 100%, sometimes a little bit more than that, because we can get more and more bonuses. So that's the goal over time. But I can tell you, every agent that's writing business with us is getting compensated fairly. And that's what matters a lot, especially to the people in the field. All right, guys, I just want to share this example. Let's use a lower factor. I want to be conservative here. Let's say, and this is very rare, some of our few carriers actually offer us at this rate, but we're working on increasing it. But let's use a 78% factor. So if I took a $2,000 target premium on an IUL and multiplied that by 78%, that'll give me $1,560. And then I multiply by my compensation rate, whether I'm at 70%, 85, at 100, 115, or 120 will give me the amount of dollars I get paid. So what I want you to pay attention to is what is the dollar amount that I actually get paid? See, even though there's a factor into consideration, what's the end result in my agent's pocket? And that's what matters a lot to us here at Experior, is that we want to make sure, as I said earlier, that the agents are getting paid fairly. To remind you, I'm just letting you know that most of our carriers on an average are doing a 90% factor. And we can show you on a one-on-one our tables, but I wanted to show you this example at 78%, just to lowball and be conservative, so to show you what the end result is for the compensation. And what about for some of you investment gurus out there who do rollovers and annuities? Well, let's take a $100,000 example. And this is with one of our providers here, as you see on the screen. If you were to do a $100,000 annuity, at the entry level, you would get paid 3%. 3% of $100,000, that's $3,000. At the senior financial associate, you would make 3.36%, which is $3,360. Senior manager, 4%, which is $4,000. And executive director, 4.8%, which is $4,800. Very fair compensation, even in a builder's model. My question, once again, as I show you all these compensation for the agent, do you think the agent will be a little bit more motivated to stick it out because they're making fair compensation? And that's what we take pride of. On top of all of that compensation talk, we also got bonuses. If you're there with an IMO today, you're like, man, does your IMO provide bonuses? We got 8 levels of different types of bonuses. So number one, the personal contract bonus. As you can see, maybe if you go back and rewind this video, at the senior manager 3 level, you can actually qualify for higher personal contract levels. You can actually go up to 130%, which is incredible. Also on the ED builder side, you can also get up to 130% if you hit the qualification. And that's a month-to-month qualification. Number 3, the carrier bonuses. Oh my God. Some IMOs don't pay out these carrier bonuses to the actual agent who is writing the business. They keep it at the top level for bonus pools and other incentives, which is shared amongst only the top players. But in our company, we actually pay that out to the agent who is writing the sale. So you can get a lump sum check every quarter or every semi-annual or every year, which is incredible. Also, they offer trips. You can qualify for trips as well, which is pretty cool. There's also the agency base shop bonus. So if you become an executive director, as I said earlier, you can qualify for 4%. If you do $40,000 of settled target premium and you recruit 4 new people onto your team, you can also make an extra 4% on any settled target premium that given month. You also have a builder's bonus up to 6% more through first. So if you're making 14% on your first generation, if you go back, we have a builder's generational override. Instead of making 14%, you can go up to 20%, and you can make 3% more on your second generation down through your 7th. It's just incredible, guys, on how much more compensation you can make for building other generations under you. SED, 5% additional personal because you become an SED. So from 115 as an executive director, you can go up to 120, which is 5% more, which is also cool. You can also hit the SED bonuses, 3% through first upon qualifying, which means that if you hit the target premium through first, which is $120,000 of actual settled premium, you actually make 3% more on your through first settled premium, which is amazing. You made it this far in this presentation, and I'm telling you that this is going to be probably one of the most valuable parts, and it's about our ownership. Ownership cubed, we call it. We got 3 different levels of ownership. Number 1 is ownership in your clients. See, at Experior Financial Group, when you see all your clients here, they're yours. If ever you decide to leave Experior, all those clients move with you, including the contracts, the carrier contracts, which is huge because we found out there's IMOs out there today that have a certain period of hold on certain carriers and certain client portfolios. And this is important to know because you have that relationship with the client. Why should any IMO hold you captive in that sense? Right? That's not cool. So for us, we want to make sure that the agent continues the relationship because at the end of the day, without clients, no company makes any money. So that relationship should be with the agent because they trusted the agent. So we want to make sure that relationship continues forever. All right. So you get a full release. Number 2 is ownership in your agency. When you become an executive director, see, Experior has a contractual buyout. If you have someone, okay, for instance, that is not licensed in Experior, a family member, whether it's your kids, your spouse, and they're not licensed, they're not looking to get licensed, Experior will still pay them 75% of your override income and your residuals on your own portfolios for the next 10 years, even though they're not licensed. There's also the RTT, right to transfer, which means that if they are licensed, they get 100% of your business, right? And in most often cases, you would want your spouse or kids to be licensed so they can inherit that full business. I want to make sure that you understand this because the agency ownership is so key. Having the right to transfer, having a contractual buyout, even if they're not licensed, in case of retirement, death, or disability, they still get an income even if they're not licensed. That's huge at 75% for minimum 10 years. The last one is ownership in Experior, equity in Experior. Experior is a private corporation today, and we're growing in valuation every single year. See, being part of a company that's growing, pioneering it, is where the opportunity is at. By the time a company grows in valuation and you get on board, you could be part of a more stable company, but the people that started that company that were at the early years were the ones who really reaped it because they were able to get shares at a low valuation and they grew that valuation over time. This is a huge opportunity, guys. You don't want to miss out on the ownership that we have at Experior. Think about the contracts you have, investigate it. I've been doing this for the last 17 years and I realized I never looked at contracts properly. Look at your contracts. If you're going to put blood, sweat, and tears into something, you want to make sure that you're part of something great. So thank you. I hope this whole presentation made a little bit more sense. For more details, book a time with us, book a time with the person that invited you, and let's get your questions answered. We would love to be part of your journey to help you see more success.